Imagine walking onto a fully permitted 8,000 square meter gold mill, buildings, ponds, transformers, proven flowsheet, a $20 million upgrade, everything ready to run, only to discover it was abandoned. And now, in 2025, that same mill is waking up in a very different world. Welcome to JuniorMining.gold, the podcast where we dig deep into the raw, unfiltered world of building fortunes from the ground up. I'm your host, Dusty Nugget, the guy who's ridden more boom and bust cycles than a rodeo cowboy on a bull named Recession. If you're new here, we don't sugarcoat the grind. We expose the guts of business, from solo hustles to empire-building shares. Before we dig into the dirt, this episode is brought to you by JuniorMining.gold. Are you tired of missing the boat on the next big discovery? JuniorMining.gold is your ultimate radar for the high-stakes world of small-cap mining. We track the drills, the assays, and the movers so you don't have to. If you want the edge in the outback, head over to JuniorMining.gold. Now let's get to the gold. Today's episode is all about a forgotten gold mill that didn't fail. It just got caught in the wrong chapter of the story. We're calling it The Mill That Time Forgot, restarting gold's sleeping giant. And I want you to settle in, because this isn't a hype piece. This is a long walk through how a team of miners spotted buried potential, rolled the dice on a calculated risk, and started rebuilding through the kind of patient engineering and smart capital allocation that separates the survivors from the statistics in this business. Let me hand you a mental model right up front, because this is where most investors get hypnotized by shiny numbers and then wake up later holding a bag of regret. Mining isn't just about rocks and recovery rates. It's about timing, leverage, and the invisible hand of finance that can crush even the best-laid plans. If you remember nothing else from this episode, remember this. Great assets don't die from bad geology. They get buried by bad balance sheets. But sometimes the right team comes along, dusts them off, and lets the cycle do the heavy lifting. Now, let's rewind the clock on this mill's history, because understanding where it came from is key to appreciating the restart that's unfolding. This wasn't some backyard operation slapped together with duct tape and dreams. We're talking a fully integrated gold processing plant, built on a mine with real infrastructure that screams competence from the ground up. Picture over 8,195 square meters of enclosed buildings. Not sheds, folks, actual structures designed to last. Tailings and polishing ponds already engineered and permitted. Process water basins ready to go. Electrical transformers humming in place. This thing was constructed to run, not just to look good in an investor deck. The design had foresight baked in from day one. Nameplate capacity clocked in at around 750 tons per day, but with a clear expansion path to 1,800 tons per day if the feed material justified it. That's not just numbers. That's built-in leverage. Optionality and throughput means you can scale up when the stars align, turning a solid operation into a cash machine without starting from scratch. And the flow sheet. No smoke and mirrors here. It was straightforward, proven tech that's been pulling gold out of rock for generations. Two-stage crushing with a jaw and cone crusher to break it down. Rod and ball milling paired with cyclone classification for efficient grinding. Gravity concentration to snag the easy gold early. Flotation and thickening to concentrate the good stuff. Then the classic Merrill Crowe zinc precipitation process. Old school, reliable, and effective for turning pregnant solution into something you can pour. The solution gets clarified, filtered, and dried right on site to produce gold doré bars. Tailings are detoxified and safely pumped to a fully permitted impoundment. No experimental wizardry, just solid, repeatable engineering. Here's the kicker that a lot of folks overlook. The economics back then weren't broken. They were viable, maybe not headline-grabbing, but enough to keep the lights on in a sane world. Average throughput started at about 440 tons per day, ramping up to 580. That translated to annual gold production of roughly 31,000 ounces, with a total haul of 125,000 ounces over a 2.6-year run. Operating costs came in at $640 per ounce, and when you folded in capital, the all-in cost hit $900 per ounce. The upfront build, around $36 million for development and refurbishment. At gold prices hovering around $1,200 an ounce, nobody was popping champagne, but the math held up. This was supposed to be a steady earner. not a moonshot. So what derailed it? Not the mill, not the metallurgy, not even the operations. It was the financial plumbing, the capital structure that couldn't handle the pressure. The company reached for growth and acquired more projects. Debt stacked up like cordwood, and when gold prices stalled instead of surging, the interest payments didn't pause for a ramp-up. The balance sheet buckled, and the whole thing went bankrupt. Classic mining trap. A good asset over-levered at the wrong point in the cycle. The rocks didn't fail, the financing did. Fast forward to 2025 and enter a new chapter. Gold doesn't just rebound, it roars back, shattering records and rewriting rulebooks. Suddenly, those once tight economics look downright conservative. And that's when a sharp-eyed mining team spots the opportunity. These aren't wide-eyed optimists chasing vibes. They're the kind of crew that thrives in mining's trenches. Engineers, operators, and allocators who see potential where others see wreckage. No legacy debt weighing them down. No emotional baggage from past mistakes. They looked at this mill and didn't see a failure. They saw a mistimed gem, ready for a restart with smarter capital and better timing. This isn't a ground-up rebuild that'll chew through fortunes. That would cost $70 million and years of permitting. No, this is a targeted recommission, leaning on what's already there. Upgrades are practical and focused. New filter presses for better efficiency, expanded leach tanks to handle more volume, and a gravity concentrator to boost early recoveries. Staffing is ramping up too, a seasoned mill manager to call the shots, plus operators and maintenance crews to keep things humming. And get this, there's even an estimated 10,000 to 20,000 tons of stockpiled mineralized material sitting on site, perfect for fine-tuning operations before cranking to full speed. This is patient engineering in action, methodical steps, low-risk tweaks, and capital deployed where it counts, not sprayed around like confetti. Now let's update the math, because this is where the story shifts from survival to serious upside. At full tilt, 750 tons per day, the mill could chew through about 270,000 tons a year. Plug in a head grade of 1.8 grams per ton and a stellar 97.5% recovery rate, and you're looking at roughly 15,400 ounces of gold annually. At today's gold prices, around $4,500 per ounce, that's about $69 million in revenue every year. Costs? Using the original operating figure of $640 per ounce, annual expenses clock in at around $9.8 million. Even if you go conservative and use the all-in sustaining cost of $900 per ounce, you're at about $14 million a year. Subtract that from revenue, and pre-tax cash flow lands in the $55 million range. The recommissioning tab, a modest $4 million, which pays for itself in months, not years, at these margins. And the longevity. This team isn't just buying a mill out of bankruptcy, they have their own ground. The combined indicated and inferred resources start at around 182,000 recoverable ounces, supporting a mine life of about 12 years at this rate, before you even factor in expansions, regional feed, or that built-in path to 1,800 tons per day. This isn't a flash-in-the-pan play. It's a foundation for sustained production built by a team that's allocating capital with eyes wide open. That's the hidden lesson in this tale, and it's one every miner worth their salt lives by. This mill didn't flop because of bad bones. It was early to the party, saddled with too much debt, and hit by a down cycle. The 2025 crew didn't invent new magic. They bought time, took a measured risk, and let patient engineering and careful spending turn potential into progress. In mining, teams like this are the quiet heroes, spotting undervalued assets, engineering their way through challenges, and building value without burning through cash like it's Kindle. It's not always glamorous, but it's how empires get forged from the dirt. The story's bigger than a ticker. It's about the grind, the vision, and the payoff. But if you want to know more about the opportunity in Quebec, a $26 million market cap outfit, if you want the full scoop, the site details, the flowsheet breakdowns, the bankruptcy autopsy, the restart roadmap, and the team that saw this diamond in the rough first, head over to JuniorMining.gold for the exclusive report. We put the link below in the show notes. This is Dusty Nugget. Sometimes mining isn't about striking it rich overnight. It's about seeing the long game, taking the smart risks, and engineering your way to the win. Stay bold, stay scrappy, and I'll see you at the next drill site. You can learn more at JuniorMining.gold. Please like, subscribe, and visit our socials or our Substack for more content.